Hi, everyone. It's the Catholic CEO, Henry Kutarna. Welcome to this Catholic Business Wisdom series topic today on foundations, a business structure called foundations. Let's take a look at this. What is a foundation? You've heard of this, no doubt, and you can see sometimes what they do and how they operate. So let's take a look. First of all, let's take a look at the definition. A foundation is yet another legal structure that is established for a particular purpose. And usually it's set up as a not for profit organization. In the US, it would be a 501c3, probably. And in the Canadian or Commonwealth system, it would be a not for profit corporation. And the idea of this and its purpose is to either raise money or preserve capital and distribute money, or simply the distribution of capital assets to a worthy cause, and also sometimes to receive donations and accumulate them, invest them, but then spend the money, issue tax receipts. So some foundations are established simply to distribute money, but others are established to raise money and therefore receive donations and issue tax receipts as an inducement for people to give money. It's a legal structure. The corporate structure model is a 501c3. Really, it's a not-for-profit corporation that would be governed according to the usual standards and rules. There's reporting relationships, there's reporting requirements, there's governance, there would be a board that would be set up to govern the organization along with the various board committees that are usual. An HR committee or an executive committee or a finance committee or a fundraising committee or even an events and marketing committee. The not-for-profit corporations idea extends to the point where the bylaws of the not-for-profit or the foundation would be established in order to specify and define the actual duties or the mission or the focus or the mandate of the foundation. And obviously, some foundations will have a very wide application, save the world type of thing, versus a narrow foundation, raise money for a particular senior citizens center, let's say, or to promote the works of a particular architect or an artist, something like that. The governance, because it's common to the corporation and the business world, would be similar in the sense of having a staff led by somebody, a director, a CEO, a general manager, depending on the title, and then various specialty people like your finance, your marketing, your operations. Your governance would be a board that would be established to oversee in the usual way. So really, when you look at a foundation, if you could think of it as a corporate structure, whether a not-for-profit or a 501c3, depending on the country you're in, the idea of a foundation is that it exists for a specific purpose, and it's not a private corporation that distributes profits or creates a surplus that can be distributed later on. It's a not-for-profit body that does works, good works, and is governed appropriately, and then basically takes in money or has money, earns interest on that money by investments, and then distributes it for a good cause, whether through money to other people or to buy services or to establish a building and a program. An example would also be, let's take an example of an apostolate, something that would be a Catholic mission, let's say, to establish the teachings of a particular group. So maybe Thomistic teaching, Thomistic philosophy, and so you would set up a foundation to support a group of people. You'd pay them salaries or contract fees, and they would do the good works, and you would take in money and issue tax receipts. So it's a standard example. You can sometimes see a combination of for-profit and not-for-profit. So there are situations where a company is established to do business and the company is making profit. Let's say it's involved in, let's take an example of oil and gas. There could be an oil and gas company that does exploration and in the normal manner, buys services, drills for oil, explores, finds oil, distributes it, sells it, and accumulates profit and has staff and a team of people and all the usual sort of attributes of business. But let's say that private company wants to do some good works, community support good works, like, let's say, preserving wetlands. In the course of oil, gas drilling, they might come across areas where the wetlands need to be supported and enhanced and preserved. And so then they might set up a not-for-profit, 501c3 or a not-for-profit corporation, and that corporation or that not-for-profit would do good works, and it would either use money received from the company itself or from donations or a combination thereof. And so you could imagine how a foundation could be associated with a private business and therefore have a combination, doing business, earning a profit, but using some of the profits to then foster some good work. This is quite a common phenomenon to see a combination of private company and a foundation. A foundation has challenges in that it can be, if it falls into political activity to a high level, there could be a criticism or even a censure from the authorities, the tax authorities. So sometimes if you set up a not-for-profit body, a foundation, it has to stick to its mission and its mandate, and it cannot deviate, for example, into political activity rather than simply doing the good works. And so sticking closely to the mission and the mandate, if you don't do that, there's a risk for your not-for-profit. You could run afoul of the tax authorities, and if you especially engage in political activities or lobbying activities beyond the scope of your mission and your mandate, you could lead to a problem. It's a risk situation. Additional risks would be when you set up a foundation, it's important to have good financial oversight. Obviously, you want to run it with financial responsibility. You want to conduct your affairs with financial due diligence, which means that you have to have the right governing body, the right talent, the right people in order to make sure that you're running your foundation in accordance with all of the laws. The income tax receipts issue requires a level of due diligence that's higher. You have to be able to track donations, receive them, document them, report on them. There's an annual filing that every foundation would have to do, and you would therefore have to make sure that you are following good accounting and standard bookkeeping practices in order to understand and track and record all of your income, your donations, and then your disbursements. But issuing tax receipts is a particular privilege granted by your local tax authority in a particular country, and you would have to be careful that you adhere to all of the standards. Mainly, the risk for a foundation is to focus on its mission without good governance. This happens quite a bit, and so I mention it today because the need for balance and focus on your mission and your mandate and your activities, balanced by good prudential government running, for example, a very excellent board that provides proper oversight and proper supervision and sets proper policies, and a good management administrative team that executes and delivers and carries out the mission and the mandate as established by the board. If this is done, you have the chance for your foundation to be run properly and effectively. In summary, the foundation structure really is designed to receive money, invest it, and then spend it on a particular good cause. And a foundation, the source of funding can be, for example, a wealthy family that might want to do some good works, and so they'll create a foundation to support something that they believe in, and then they can convince others to believe in. And so they'll fund it from their own funds. Sometimes the foundation is established by a group of people who come together to focus their energies on a particular cause. And I use the wetlands example as one example. There's all sorts of topics you can imagine But you could have a single focus in your foundation. You could have a multiple focus in your foundation. Your foundation could be local. It could be regional. In other words, a state or a province. It could be national in your country. It could even be global, and where you take on funding and you distribute funds for good works all over the world on a global basis. And so the idea of a foundation for charitable works as well is very strong in particularly in the West, where people will set up a foundation to support a particular medical situation or a research function or a cause where social good is assisted by the funding. So in summary, it's a simple concept, but it requires the usual standard proper oversight, good governance, due diligence, good operational practices, sticking to their mandate, not running afoul of the regulatory system or the tax system, but effectively doing good works. Last comment about foundations. The goodness and the longevity of a foundation is certainly enhanced by doing good work, and it's certainly something that can be lost easily. There are many stories, you've heard these, I'm sure, where a foundation starts out with a good reason, a good effect, but then runs into a scandalous situation or a financial crisis or mismanagement or some misalignment, which causes the credibility of the foundation to plummet, and then the foundation falters and the whole thing comes crashing down. Most foundations are run effectively and are limited to their normal functions, and they operate year after year on a successful basis, carrying out their good works. So there you have it, a little summary of the foundation as a corporate structure to achieve good works. It's the Catholic CEO, Henry Kutarna. Thanks for joining me today. We'll see you next time.